Gold soars past $5,000 as US policy risks and global uncertainty ignite safe haven frenzy. Gold prices surged to unprecedented level this week, reaching the $5,000 per ounce threshold for the first time as mounting uncertainty surrounding US economic policy, geopolitical tension, and central bank credibility pushed investors decisively towards safe haven assets. Spot gold climbed more than 1% on Tuesday, trading near $5,180 per ounce after touching an all-time intraday high $5,110.50 a day earlier. The historic rally underscores a growing loss of confidence in traditional financial anchors, with markets increasingly bracing for turbulence emanating from Washington. The surge has been fueled by a convergence of risks, escalating trade tensions under President Donald Trump's renewed tariff threats, fears of partial US government shutdown ahead of the January 30 funding deadline, and intensifying scrutiny of Federal Reserve's independence as its policy meeting begins this week. Gold has already risen nearly 18% this year, extending last year's record-breaking rally. Analysts point to expectations of eventual US interest rate cuts, aggressive central bank buying, and a broader global shift away from dollar dominance as key drivers behind the metal's meteoric ascent. Gold rallies typically fade when the original catalysts lose momentum, said Michael Whitmer, commodities strategist at Bank of America. But in the case, those forces, policy uncertainty, geopolitical instability, and institutional demand are not dissipating. Markets are now closely watching Federal Reserve Chair Jerome Powell's post-meeting remarks on Wednesday, amid growing investors' unease over political pressure on the central bank. While rates are expected to remain unchanged, any signal of policy vulnerability would further stoke demand for gold. Major financial institutions are already recalibrating their outlooks. Deutsche Bank and Societe Generale have raised long-term projections, forecasting gold could approach $6,000 per ounce by 2026 if current dynamics persist. Elsewhere in the metal complex, platinum and palladium retreated sharply following recent record highs, underscoring the selective nature of the current safe haven trade. Platinum fell more than 4%, while palladium spilled over 2% as investors prioritized assets more closely tied to monetary protection. Ultimately, the historic surge in precious metal reflects a deeper anxiety rooted in US political and economic uncertainty, from renewed trade wars to fiscal brinkmanship and concerns over central bank autonomy. Washington's policy trajectory has become the dominant force shaping global market psychology. As long as these risks remain unresolved, gold's ascent may be less a speculative spike and more a signal of a profound shift in how investors perceive stability in an increasingly fragmented global order.